Hey, what's up everyone? JT here. Welcome to Pineapple Money, where I talk about stock market news and investing for the long-term portfolio. And of course, as you see in the title today, we're going to be talking about dividend investing. I would say dividend investing is actually one substantial way to add to your long-term account. And honestly, in my own opinion, I think everyone should own a long-term account. Whether you're a day trader or a no trader, you got to have a long-term. So briefly, if you don't know what dividends are pretty much when a stock is basically paying you money to hold their stock, which is essentially passive income. And honestly, who doesn't like getting money for doing nothing? Now, going back to the SPY ETF as you saw previously, if you scroll down to their stats, you can kind of see there's a thing called a dividend yield. And this is where a company or a stock, such as the SPY, will show you how much they're paying you to hold their stock. So in this case, SPY ETF is paying us 1.65% a year to hold their stock. So in this video, I'm going to go over my top 5 dividend companies that I'm actually personally holding and break down each stock by their company mission, the dividend payout, and other immaculate things I actually really like about them. And for this video, I'm not going to include stocks like Apple or tech stocks since I would classify them more as a growth stock with a dividend. So they're not really a complete dividend stock in my personal opinion. So don't forget, if you do find anything interesting in this video, please don't forget to hit the like button down below and subscribe for more content. And also let me know down in the comments if you think you have other dividend companies that are except for mine that are also awesome as well. Thank you so much. Oh, and don't forget, I'm not a financial advisor in any way, so these are just my own opinions. So please do your own due diligence before investing. Thank you so much. Now, I know there are a lot of dividend companies out there, but before I go into my own favorite companies, I kind of want to break down what kind of makes a good dividend company, at least in my opinion. So I want to break it down to at least 3 categories. So let's take a look. So what makes a good dividend stock? There's 3 things. I'm going to go the first one. The first one is the stability of the company. So how stable is the company for the long term? Are they able to maintain some growth and also continue to being profitable? Second is industrial strength. So what that means is fundamentally, is the company a right impact within its respective market? And does it have a strong presence in a way? So for example, like I'm going to give an example, let's say Pepsi or Coke. I would say in the consumer market niche, they are pretty strong and have a very substantial footprint in that market. Third one is the dividend to payout ratio. So does the company have a reasonable good dividend that I would be okay with having my money sit with that company? And of course, is the payout ratio low enough that the company doesn't go bankrupt? So personally, I would say that these 3 categories are what I kind of personally look for in a dividend company, especially in my portfolio, but every investor can be different. All right, so let's get into my 5 dividend stocks. All right, so the first dividend company I want to talk about is ABBV. ABBV, ticker symbol ABBV, is a great dividend stock. And I would say that this stock actually flies under the radar for a lot of dividend investors, which is not a bad thing either. So what is ABBV? ABBV made their debut back in 2013 when they split from the parent company Abbott Labs. And Abbott Labs, I'm sure you might have heard of from the news when President Trump has talked about them. But Abbott Labs is a dividend aristocrat, which also means that they paid the dividend at least 25 consecutive years. So pretty much what I'm saying is that AbbVie is probably very, very unlikely to ever cut the dividend because AbbVie is, and of course, a split from the parent company Abbott. So what I really like about AbbVie is through their sustainable drug, which is also their main cash cow, Humira. Humira is, of course, their main cash cow, and it focuses on rheumatoid arthritis, which in Q1 2020, this drug alone generated about $3.7 billion in total revenue domestically, which is a 13% year-over-year increase from 2019. And totally, the revenue in Q1 2020 for the whole company itself is $8.6 billion, which is a 10% year-over-year increase. And actually, most recently, AbbVie did acquire Allergan, which is known for their Botox, which also fundamentally generates well over $1 billion in revenue over a year. In short, I'm not really worried about this company since fundamentally they are robust. Now, I'm sure you want to know what's so special about this company and why do I like it. So here are the details. AbbVie pretty much is a company that has a massive dividend of 5.6. Share price, which is around $84 to $85, which of course this can change over time. Now, I would say this is actually really good when comparing to other companies, since other companies such as Coca-Cola has a 3.2 dividend yield, or maybe a SPY ETF, which is a 1.6. And a lot of good companies, I would say, is around that 3% average range. Now, AbbVie's payout ratio is about 45%, which would be considered healthy. And to give some perspective, a good payout ratio is 0 to 35%, because of course they're using their revenue to invest back into the company themselves. A healthy range is around 35 to 55%. And then a high range is a 55 to 75%. And then a very high range is 75 to 95%, which of course means that the company is using more of the revenue to pay back shareholders, which of course I would say is a little dangerous to hold. But AbbVie in general, I would say a 45% pay ratio with a dividend of 5.6 are both very good in my book. My next favorite dividend stock, number 4 on my list, is ticker symbol KO, and of course no introduction needed for Coca-Cola. So yeah, I don't think it's really much explanation needed for Coca-Cola, since you know it's Coca-Cola, but they do have a lot of things that Coca-Cola does own. And of course, I'm sure you've probably seen one of these or have used multiple of them. So first, Coca-Cola is a dividend aristocrat, which easily exceeds their 25 consecutive year threshold of giving out dividends. So they're also very, very unlikely to cut their dividend anytime soon, especially in the hard times. Now, from the recent earnings of Q3 2020, looks like they did beat expected earnings per share with a revenue of 55 cents and $8.65 billion respectively. And Coca-Cola did report a $1.74 billion in net income, which was down from the previous year of $2.5 billion, which, while Coke doesn't really generally sound too promising for the high growth like the other tech stock brethren, Coca-Cola is a consumer product and does and will stay for a long time. Now, their CEO, James Quincy, did say from the Q3 earnings that we have been winning shares in at the home channels, and they're going to set us up for emerging stronger and being in a stronger position, even though mechanically in the short term we lose share. So right now, currently they are having setbacks due to the said illness, but over time they will grow even more. So I'm not too worried. And as you look, you can kind of see the quarterly sales in general. Here is from Q3 2020. And here are the past sales as well. So I would say this is also kind of within range. So I'm not too worried since it is Coca-Cola. Now, of course, let's get into the details. Coca-Cola does pay a dividend of 3.25% with a share price around $50 currently. And now Coca-Cola does currently have a payout ratio of 77% based on earnings, but a 66% based on their cash flow. So it is a little high, but of course you can see a dividend safety score of right here of 80, which is not that bad at all. So I would like to say that I'm not really afraid of owning this company since it is a consumer product and a lot of consumers will use it. So they are still very solid, and especially for being a dividend aristocrat. Now, I would also say that if you are curious in this specific consumer market, there's also Pepsi, which is a good alternative. And I would say Pepsi also has and probably a better balance sheet than Coca-Cola in my personal opinion, and pay a reasonable similar dividend as well. But Coca-Cola does pay a little bit more. But in general, when I grab a soda, I do prefer Coke, so I might as well just invest to a Coke stock. Number 3 on my list is JP Morgan, ticker symbol JPM. Now, I'm sure if you've had any Chase's famous travel cards, such as the Chase Sapphire Preferred or Reserved, I'm sure you know what JP Morgan is at least. So I actually recently picked up a bank stock around March, during, of course, their lows. And to me personally, JP Morgan seemed like the best investment compared to Wells Fargo or Bank of America. Now, I really like JP Morgan since it's a bank, and like most banks, especially JP Morgan, are well diversified with their streams of earnings, investment banking, wealth management, and trading. Now, since of said illness in 2020, a lot of banks have been hit really hard. And of course, you see this big dip right here, especially in regard to their issued debt that have not been paid back yet and less spending previously in quarter 2 2020. Now, the Fed on September 30th, 2020 also placed the US banks in general restrictions to limit banks' dividend payments and suspension of stock buybacks for the third and fourth quarter of 2020. In contrast, though, I would say the Fed is also, printing a lot of money, like no tomorrow, and assisting these banks and many other companies with this time. So I'm not too worried about JP Morgan. So to the details, actually before then, I do want to say that JP Morgan in quarter 3, 2020, pretty recently, they did actually beat analysts' estimates. And they posted, of course, you can see right here, a third quarter profit of $9.4 billion, as well as at $2.92 per share, which exceeded expectations of $2.23. So that's actually pretty good. Now, to the details, I'm sure which you all been waiting for. JP Morgan right here does pay a dividend of a 3.47, around 3.5, with a price around $103 currently right now. And JP Morgan does have a payout ratio of about 34% based on earnings and 25% based on cash, which to me shows that JP Morgan is healthy, and I'm not really worried about this company at all. But JP Morgan does have a history and a record of paying their dividend 9 consecutive years now. The last time they did cut it was during the housing crash back in 2008-2009. So I think it's good to be aware of that. If anything does more severe come up because of self-illness, like another shutdown, banks in general may suffer as well. And of course, dividends might also be hindered. However, I also still continue to hold JP Morgan because of its dividend, and I think JP Morgan is also a value stock to hold for the long term. JP Morgan was heavily beaten down back in March, so that's why I picked it up. And when the economy does get back to more normalcy in the future, JP Morgan will of course reach their highs again, so I'm okay with holding their stock until then, even if they may not pay a dividend if things come to worsen. So, like I said, I did pick up these shares within this year, and I'm coasting right now, just holding their shares to collect the dividend. So I strongly believe that JP Morgan will trend higher in the future. The second one I want to take a look at is an interesting stock, AT&T. Ticker symbol T. Now, I'm just going to say right off the bat that I picked up shares of AT&T solely because of its high dividend rate of 7.4%. Now, AT&T is a communications company, and of course, they do have mobility, which is our telephone communications. They also have Time Warner Media as well as HPO. And in the future, AT&T will slowly implement more 5G. So even though communication companies like AT&T can be considered a slow growth company, AT&T is a dividend aristocrat. So what that means is that they've been paying the dividend for at least 25 consecutive years. So what you're thinking is, what's the catch with AT&T? How can they have a massive dividend without any risks? Well, a lot of investors will probably shy away from AT&T just because of their huge debt. And AT&T does have debt. But AT&T just recently reported their earnings in October 2020, quarter 3 2020. So let's take a look at those financials and we can kind of see what's going on behind the hood. And we can take a look at their income as well as their debt and as well as their cash flow. So I know financials in general can be difficult to look at, but just bear with me. So AT&T, here's their net income. As you can see in quarter 3, they did have a net income of $3.168 million, as well as previously quarter 2, 1.563. So as you can see, this is a huge jump in quarter 3, almost double, I would say. Now here's the debt, and this is probably the more important ones to take a look at. But as you can see that AT&T is issuing more short-term debt, about 1 mil, but then also repaying it about 1.7, and then issuing more long-term debt about 10 mil, and of course repaying more long-term debt at 20 mil. So in general, I would say this is actually kind of complex for us to take a look at, since also it's $1 million. But I would also say whoever is the accountant for AT&T should get a raise, because they are pulling some magic numbers, and honestly, they know how to leverage their debt properly. So let's move on to the next one. As you can see, AT&T does have a debt ratio of about currently 44.9% in quarter 3. And as you look at from quarter 2, 46.6, and quarter 1, 45.7, I would say that this debt is kind of within range. and nothing too far off. So I'm not too scared about that. And now AT&T's cash flow, free cash flow, they do have about 8.2 for this quarter and 7.5 for the previous quarter. So I would say there's actually been improving. And it's also no surprise that when AT&T did report these earnings last week, that AT&T jumped up 5.8% to 28.28. So as you can see, a lot of people were kind of surprised by AT&T's great earnings. Now, as we move on to the details, AT&T does currently have a dividend, of course, of 7.48% and a price right now currently of around $27, $28 range. And of course, their payout ratio is currently around 58%, which is relatively fine, not too high, but not too low. So it's kind of just right in the middle. And like I said, even though with their high debt, I'm still not worried about owning this company for the future. And like I previously mentioned, AT&T, they have a huge, massive dividend, and that's why I personally like it. But fundamentally, they are preparing for 5G. So I personally think that right now, in terms of price, anything under $28 is an amazing place to buy. And honestly, I would be okay with holding for the long term, and I would say that's actually pretty good as well. So as AT&T kind of just maintains that price level, you can collect a dividend from them. All right, let's move on to my number one dividend stock. Johnson & Johnson is one of my favorite stocks to own ever, period. And the kicker is J&J is a dividend king, which means J&J has been paying their dividend for a consecutive 50 years or even more. And J&J honestly will probably not cut the dividend anytime soon and will probably keep paying it for a very, very long time. Now, J&J, I'm sure you've probably heard of them before, but Johnson & Johnson owns a variety of products, and I'm sure you've probably seen and used multiple of these before. And their products range from basic band-aids to lotions to shampoos to even medical devices. Now, J&J have so many brands under their belt, it is crazy, as you can see right here. And they seem to honestly do it all. And which is why I really love this company for that. J&J is low-key a hedge fund for all these many healthcare brands, which essentially means that they are pretty well diversified, which also means that the investors, which includes me, are also diversified whoever invests into J&J. And for example, if one product does, say, face criticisms, which has happened for J&J before regarding a baby powder, it wouldn't affect the stock as much, but of course, they will somehow solve it and then it will be going back up to normal. But looking at the actual stock itself, as you can see right here, J&J has been trading around the $140 range for a while now and has reached back to pre-said illness levels over here. And Wall Street analysts have given J&J a price target around an average of 166, while giving a 10 for a buy, 2 for a sell, and 6 for a hold. So nothing too crazy on the stock side for J&J. But in regards to financials, J&J did beat Q3 earnings in quarter 3 2020 and even raised their full year guidance. So with the company generating about $21.08 billion in revenue, which was expected to be a $20.2 billion in revenue, and actually a 5% up year over year. So honestly, this is all looking good for J&J in terms of financials too. And also shows that J&J is actually growing steadily. Now looking at the most, of course, interesting details is that J&J is paying a dividend yield of 2.78%, with a share price currently around $145 and a payout ratio of about 46%, which is actually pretty good and healthy. And of course, J&J was given a dividend safety score of 99. So in my book, I would say J&J is overall a very, very safe company to hold for their dividend. And like I mentioned earlier, I love J&J because they're very, very diversified and they own a lot of brands under their title. So in the long term, I do expect J&J to grow slowly as the years to come, but I will sleep soundly knowing that I will probably be getting a dividend from the dividend king over here. So here's just a quick summary of my favorite dividend stocks that I personally own. Here's the 5 of them. And I personally do own all these stocks in my portfolio, and I never plan on really selling them unless in the future something really does change. But I never really plan on selling them because of their value and the compounding interest, of course, that they add to my account. Well, I personally do think that only one of the stocks here that I may be questionable to cut their dividend is JP Morgan because of said illness right now. I do see a strong value play for this stock in the future. So as you can tell, also my favorite stock is J&J. Having this stock in my portfolio, I know I can sleep soundly at night for knowing that I can get a dividend and also knowing that they will probably maintain their slow and steady growth. But whenever this stock is on sale, I ask no questions and I just buy some more. So this kind of wraps up my top 5 dividend stocks that I personally do own. If you found anything interesting in this video, please don't forget to hit that like button down below. And also let me know down in the comments what your favorite dividend stocks are as well. Thank you so much for watching. Peace.